Hey everyone. Wow, what a week we have here, or at least that's what it seems like. It is the general election week here in the United States, kicking it off with a Halloween weekend, and November 1st being on a Sunday puts the election right there at the absolute start of the month of November, and it'd be hard for you to miss that that's happening this week. At least if you've turned on any news sources or anything the like. With the election being this week, I thought it'd be in not only your best interest, but almost in my best interest to take a minute to just quickly cover a few different thoughts regarding the election as it relates to the markets and as it relates to the overall, not only financial marketplace, capital markets, but the economic marketplace and the economy as the United States looks ahead at what the next 4 years may have in store. Probably more relevant is just what we have in store collectively as we move through what continues to be really unsure political environments. And that harkens back to 2016, where we had this great sense of uncertainty. And prior to that, while 2008 and 2012 collectively had, I would say, maybe a greater sense of certainty, we could really look back even further and look at the George Bush election contested by Al Gore with the voting conundrum in Florida to see that uncertainty around elections is not necessarily a new phenomenon, but it most certainly does feel very, I don't know, maybe disconcerting right now. Things definitely feel a little unsure. But I wanted to, again, talk about a few points that you may not necessarily be thinking about. You're probably not being given this perspective or point of view with the pundits on TV and the others who really are incentivized to do what they can to stoke fear. We know, and we can look at the past 4 years, drumming up fear on both sides, be it Fox News or CNN, as the two, what might be seen as absolute counterparts to one another. But all the others, they've realized that there is a lot of benefit to themselves. New York Times is another character in the discussion, and Washington Post, et cetera, that are benefiting from this idea of driving fear. Fear keeps readers engaged. It keeps viewers engaged. It keeps people coming back. It's not a new idea. This is something your local news has used for years now. But the idea that it's just bad news and there's really no good news, or it's just the things you need to be afraid of and not all the things that you need to be perhaps grateful for or positive about, that I think is a little bit new. So to say that none of this is new, that's not true. But to say this is all new, also not true. But again, as it relates to the markets and the economy, most specifically, a couple points I want to hit on. One, and this is just kind of the 30,000 foot view. As an investor, it rarely benefits you to be a investor in political party or an investor in red or blue. To invest the way that we seem to do on a personal level, in accordance with ideologies and fundamental concepts that are maybe guiding principles in our own lives, it's very rarely a beneficial investment strategy. And that's because investments as a whole are flexible, they're malleable, they change shape over time. You can look as easy as companies like IBM, who originally made scales and clocks and turned into the computing giant that it became, and then now it's even evolved further. Companies change, markets change, they evolve with time. So to stay steadfast in kind of a bit of an ideologue in your personal life is one thing, but to apply that to your investment life, it's rarely beneficial. So to try to forecast, I need to sell everything or buy everything or whatever it might be simply because of an election, not going to be something that I would encourage anyone to do. And that's because it rarely pays off. But to kind of get a little bit more kind of in the weeds, I think it's important to realize a few big changes that have occurred in the past year, partly due to the coronavirus outbreak, pandemic, scamdemic. I don't care what you want to call it. The harsh reality is that our lives this year have been altered because of not only the potential of a virus that has a lot of unknowns, still to this day has a lot of unknowns, but the other side of it is the politicization of this event. There's no secret that politicians in general never want to let a good crisis go to waste. I think that can be attributed to Rahm Emanuel, who initially was quoted as saying that, but I don't want to give him credit for that because it's not just a one-party thing, and I know that that's a term or a phrase, a term of mine that has been used well before his coming into political center stage during his time. But the state of markets as we stand changed primarily because of two main events that occurred. Main event number one actually happened 10 years ago, and that's 2007, 8, and 9. The financial crisis. We saw the Federal Reserve absolutely completely change how they interact with both the economy, the government, and then beyond those two, also in the space of the citizenry, the average person. And part of the big change was that through history, the premise of the Federal Reserve was built on this idea that they would control what's called monetary policy. All that is, in its most simple form, is the ease of access to borrow money. Now, ease of access can be defined in different ways. It can be defined by the supply of money. It can be defined by the interest rates. In other words, how much it costs you to borrow money. They modify things, and how they modify it and the ways in which they interact with the market are various. However, their sole objective was to control monetary supply or monetary policy. Congress, on the other hand, would be in control of what's considered fiscal policy. That is, generating or not generating income for the government. And fiscal policy has a lot more to do with taxation. I mean, that's kind of what you can really narrow it into. 2008 and 9 happened, and we ended up seeing the Fed really take on a much more prominent role in the lending marketplace. Lending to the US government, because the US government began borrowing money. And when they borrowed money, there was two ways they could do it. They could go to an open marketplace and borrow money, or they could go to the Federal Reserve, which is not a political institution. It's a private institution. It's not a government institution, rather, but a private institution, the way it's founded. And that's just a little bit of unique and borderline dark history that we could cover at a different time. But to borrow all the money that they did to get us, supposedly, to get us out of the financial crisis and to bail out banks and to bail out Fannie Mae and Freddie Mac, and we ended up kind of coining this term, the Feddy, right? There was Freddie, and then there's Feddy. Ben Bernanke came through with this idea that he, and the Federal Reserve Board coined quantitative easing. And really what that was is they monetized debt. What monetizing debt means is they printed money that then the banks could use and the government could use to borrow against. Rather than having to go to the open marketplace, which would then create credit issues for the United States. Because, as we know, if you borrow a lot of money and you really don't have that much coming in, creditors, those that are going to give you money, they're not going to be as easy to give you money, or they're going to charge you a lot more to give it to you. So that's where you get this monetizing the debt. That was big change. The other big change came this year, where we ended up having this coronavirus crisis, perceived or real, that led the government to actually, and not just the government, but the Federal Reserve, to actually adopt what was once fringe, and for good reason, fringe economic philosophy that has been recently termed and I think thrown about a little bit, maybe too freely, but the idea that it's called modern monetary theory, MMT. The idea of modern monetary theory, without glazing over it too quickly, but also without going into so much detail, because there's more to it than what I will just brush over. But to be as fair as I can to something that I do believe is fundamentally flawed beyond belief, and your gut reaction to what it is would probably tell you the same thing, whether you fully understood it or not. There's just a funny gut feeling you get. But the idea behind it is primarily for countries that are very well developed and dominant in a global marketplace, as the United States is, arguably the most dominant, although that could be challenged. These countries, as a whole, globally, we all operate on what's considered to be a fiat currency, a currency that does not have a common denominator that effectively sets the value of that currency. Instead, it's backed by the good faith of the US government or the good faith of the Treasury. To verify this, go look at a printed currency bill, $1, $10, whatever, and you're going to see this bill is backed by good faith of the government. That is what denominates the value of our currency. So the idea of modern monetary theory takes this into account and says, well, if we determine how much our money's worth and we're capable of printing our money, and it really doesn't matter what is it really worth because we're on top, why not just print all the money we need to pay our debts and to cover our expenses, and to, as some politicians have been wanting to really get aggressive with the idea, why not just print everybody's income and everybody just gets money given to them because we can? As you can imagine, this gets really flawed really, really quickly. And this is that gut feeling, the idea you just create this ability to purchase out of thin air. It doesn't take an input, as with just about any, and unless of course somebody has created the perfect machine that actually does not require energy input. We all know that in order to output something has to go in. Newtonian laws would dictate in some senses that there's no spontaneous creation of matter and of forces. You have to input a force to create a force. The idea of modern monetary theory was effectively implemented this year, though. And it was implemented on two accounts. One is the free money check that the government included in the CARES Act stimulus. The idea that every person making an X amount of money or less last year just magically had money deposited to their bank account. And the other side of it was the number of business stimuli, expenditures that the government made on assets that they don't have, or earnings that they don't have, revenue they don't have, to effectively stabilize the marketplace when that same government is the one issuing orders that they can no longer conduct business. Real big problem there is all those free dollars that came in. If you think about it, the United States wasn't really producing anything during that given period of time, but people still had this money to spend. Where did they spend it? Well, they didn't spend it in the United States. They spent it probably in China because they were ordering things online through Amazon, etc. So that's just, again, a little food for thought. But the reason I bring all this up as it relates to the political atmosphere is that markets in general, economy as a whole, the economy, have become far less concerned with presidents and frankly with Congress and the fiscal policy that Congress is in control of, as they are about the extended monetary policy control that the Federal Reserve has effectively absorbed or created, depending on how you look at it. The Federal Reserve is really the driver of markets right now. And that can be seen in some of the speculative measures that markets seem to be showing with regards to when you have this idea of a blue wave. The idea that when that became the polling odds, that the market kind of came up or rebounded a little bit from a low that it had been selling off to. The idea behind that is, well, if that happens, we're certain to get extended and amplified versions of this modern monetary theory, this free money concept. On the short term, sure, that's going to benefit markets greatly because markets will say, look, free money. But we all know that that is not sustainable, and it's not likely to be the starter that just turns the motor on and then the motor magically takes over and then replenishes the pot from which that free money was taken. It hasn't happened from 2008 and 9. Why would it happen now? Our budget deficit, our deficit spending in combination with our overall debt have skyrocketed, even though the economy was so good. Okay, well, the question is, when do we begin repaying these debts to ourselves even? Well, you don't. So that is fear-inducing for the longer term, but right now everyone's fears are very centrally located. And I would argue that right now you have absolutely no reason to be excessively fearful as it relates to markets and as it relates to the economy. Now, there will come a day of reckoning. Does it come next year? I don't know. Does it come years after? To be seen. But to get you through this week, I want you to really remember that the state of your wealth and your overall positions in the market, you're going to be told you should be very afraid. But the reality is that the market is far less concerned with the state of the presidency as it is with the state of the Fed and the Federal Reserve. The fact that the markets are far less dependent on a candidate as they are on the state of the Federal Reserve, that is really what should be driving at least your considerations and concerns as far as your portfolio is concerned. There's going to be volatility. There is volatility right now. We saw swings last week. We saw swings this week already, early in the week. And we will probably see them, especially if we get a contested election and all this other stuff. But the idea that all of these companies who are doing well, that they have any type of incentive to just simply shut down in the event one candidate wins presidency over another, or that the Senate goes one way or the other. These companies, they're just going to have to change how they go about things based on the situation, but they're going to change in order to try their best to be profitable. So the idea that the entire marketplace just kind of shuts down is not because of presidency. If it's going to shut down, it's going to shut down because of bad policies that have been in place that are being continued and pushed forward, and that kicking the can down the road and borrow from the future self with no intent of ever paying it back, that is the thing that will end up destroying the stuff that we work so hard to build up. It's not going to be a political candidate. So, don't tell your local news source that I told you this. They're not going to like the fact that there's somebody out there going against what they're trying to do, which is just keep you afraid. And this is, why this person's going to ruin everything and all and da-da-da. Look, move past that, please. I implore you to please move past those ideologies, because being a part of a team when both teams are incentivized to do the wrong thing is not a team you want to be a part of. It's okay to be a free thinker, an independent individual, and to think best for your own self, family, those you care about, and plan accordingly, rather than simply towing the line of given party, insert party name here. So I wish you the best, and please keep a sound frame of mind through all this. It's going to be a little bit difficult simply because of the news sources and stuff that we're all going to be fed. The stories and this, they're going to be cherry picking. They're going to be picking what they want you to hear that's going to keep your attention. So don't fall prey to that. Go find somebody that you care about, that you love. Tell them hello. Tell them you love them. Talk to family, talk to friends. But don't be living in a state of perpetual fear. But until we see you on the other side of this election, have a great one, and talk to you soon. All right.